So I like to watch patterns when I trade, and I look for patterns when I trade. For instance, um, I'll watch a group of stocks, and if they're acting the same way and they're all forming like a daily divergence, that indicates to me that everything's going to move back. If I don't see any classic formations or patterns saying that they're going to reverse, I'm assuming that the trend's going to stay the same and that any pullbacks would just be temporary. I like to look at this over groups of stocks because it helps me understand what the whole group's doing, or maybe there's subgroups within. Like I've seen recently commodity stocks move in a particular way. Just as I was on lunch break looking through the market, I thought I saw a pattern in the S&P that kind of scared me out, and I'll show you what it is. It looks like a continuation pattern of the bear market, which would be pretty ugly because that would be a complete washout. On the other hand, a complete washout gives you lots of opportunities if you're in cash positions at this point in time. So I'll show you what I see. Okay, so this is what I saw at lunch. It looks like a triangle is forming at the bottom of the SP 500 right now, which could mean one of two things. Either we turn, and if we continue this turn, we can break up through it. I think we'll probably have a bottom here. That would be my guess. Like I'm some expert, right? But another possibility, which I'm thinking as I see this triangle, is that we come back down through it, break through the trend line here, and fall down. And according to your pattern theory, you're supposed to measure the distance from here to here, which is roughly 200, maybe under 200 points, and then it says you'll drop that distance from here. Patterns don't hold up as well in markets, like as far as measuring things go. But you just want to be looking for anything. So I'm thinking as we continue to watch this market, I might just play this right here as a bounce down. So trying to look for stocks to short or continue going short, even though it seems unlikely. And if it does break through this, there's some opportunity for massive money. If it continues up or breaks through the triangle to the upside, I think we have a possibility that it could be a turn in the market, at least temporarily. Here's the daily chart. I'm going to point it out to you. And another another typical continuation pattern is when you get a pennant. And this doesn't look nearly like the typical pennant pattern, but it's very similar, where you start here and you drop down to here, and then you have consolidation, and then it continues down. And this kind of also indicates about a 200-point drop, which is scary. And just for, if you're curious, oops, get rid of that, sorry, if you're curious, this kind of looks like, let me zoom in here a little bit, a slanted head and shoulders, which I found really interesting. I saw that forming a long time ago, and then I forgot about it. I just didn't pay it any more mind, and sure enough, it looks like it. You could consider it a head and shoulders, but that's probably a little voodoo technical analysis. That's about it. The only other thing I wanted to show you was where we are on the Fibonacci. If you draw a Fibonacci from back here 2002 up to the peak, and where we are today, if we drop, we probably would drop. If we did drop down through that triangle, we'd probably drop down here to like 750, which is only like 150 from where we are today. So again, you may want to use that as a gauge, as a place if we do fall where it might bounce to. My point in this, I guess, is that you don't necessarily try and predict solidly which way the market's going to go with one of those triangles, but you use it as a guide. And if we see some nice solid action moving up off of that triangle, we should assume that the trend is broken, and at least for the short time, we're going to have a bit of a bull rally in this bear market. If it breaks to the downside, we can then assume that we're going to have a continuation of the bear fall, and maybe we will actually drop significantly lower and finish out that Fibonacci sequence. So if you do play things like that, keep very tight stop, and be wary of keeping positions overnight, especially if you're going to short the market, because you never know what's going to happen the next day.